Good morning, everyone, and welcome to the European crossover webinar. And we're waiting for some data to come out. We just came right here with the current account data, right here with the Eurozone. Bear with me. It just popped up now. We don't have HICP final. That's not going to be until the top of this next hour. As I said, the time over here on here is off. I'm going to get that, trying to see if I can get that resolved today. New computer. I have the time set, but for whatever reason, it picks up on the older time. See if I can't get that fixed today. Um, and that's going to be the only data I'm showing here for today. A moment. I do have Italian current account data. Let's take a look here. Yeah, that's all. I'm not seeing anything here, even in the States. No data out for today. So let's go ahead and take a look here with just quickly hit the news and we'll just move into the bias chart. Safe haven currencies out of favor on stimulus hopes. Safe haven currencies such as the yen and Swiss franc were under pressure on Monday as expectations that policymakers would unleash new stimulus eased immediate concerns about a slowing global economy. Such hope found support from Chinese central banks' interest rates over the weekend that are expected to lower corporate borrowing costs and reports of new stimulus in Germany. Yeah, I see here that they did have a cut in China or their loan rate. Essentially, it said it amounts to like a 45 basis point cut. Hawaii is however, investor optimism likely to be capped ahead of the U.S. decision later on Monday on whether it's continued to allow Chinese Hawaii Technologies to buy supplies from American companies. Hawaii is a big test to see whether the current risk-on move will continue in the current currency markets, said Takuya Kanda, general manager at Gut Farm. There's a reason to calm right now because the stimulus story is supporting the dollar against safe haven currencies, but I'm not sure how long this calm will last. Yeah, the dollar index, which measures the greenback against six major currencies, was marginally higher in Asia against the yen. The dollar's low change at 637. The yen and the Swiss franc, both of which tend to be bought as a safe haven during times of economic uncertainty, fell slightly on Monday versus other currencies. Risk sentiment could improve further in Washington offer some concessions to Hawaii, which could make a resolution of the U.S.-China trade war more likely. The U.S. government blacklisted Hawaii Technologies in May, accusing the world's largest telecom equipment maker of espionage and intellectual property thefts. The allegation, which Hawaii denies, were a serious escalation of the trade war. The U.S. Commerce Department is expected to extend a reprieve given to Hawaii that permits the Chinese firm will to buy supplies from U.S. firms so they can service existing customers. Two sources familiar with the situation told Reuters on Friday. However, President Trump said on Sunday he did not want the United States to do business with Hawaii for national security reasons, casting doubt over the decision. While the rejection for Hawaii could easily fuel another bout of risk aversion, risk-sensitive currencies appear to have found some support for now. The dollar edged higher to 97.95 Swiss francs, approaching the highest in almost 2 weeks. Australian dollar also drifted higher to 72.12 yen for the Aussie yen. The People's Bank of China unveiled a key interest rate reform on Saturday to keep steer borrowing costs to form lower for companies to support a slowing economy that was hurt by the trade war. And the onshore yuan market traded 77.0447. The details of the Chinese stimulus came after German media reported that the German government may be open to running a fiscal deficit to boost growth. Hopes for stimulus to help Germany's economy, which is on the brink of recession, also raised after Finance Minister Olaf Scholz suggests the government is ready to spend. Scholz said on Sunday the global financial crisis in 2008-9 cost Germany roughly 50 billion euros, but Germany has the fiscal strength to spend a similar amount to counter any future economic crisis. Euro gains after the biggest weekly drop in 6 weeks as risk appetite returns. The euro steadied on Monday after suffering its biggest weekly drop in nearly 2 months as risk appetite gradually returned to global markets after a week of turmoil. With hopes of fiscal stimulus from Germany growing and steps by China over the weekend to cut corporate lending costs, pushing up equities. Growth sensitive currencies such as the Aussie dollar also is higher. However, investor optimism is likely to be capped before a speech by Federal Reserve Chairman Jerome Powell later this week at Jackson Hole. Market strategists believe his comments will be aimed at reassuring nervous markets that the Fed will remain in an easing stance and set the stage for more rate cuts. Powell's speech will set the stage for the minimum of 25 basis point cut at the September meeting, stressing the quantitative tightening is over and stressing that the committee's bias is now back in accommodation mode, said Elsa Lingos. Against the greenback, the euro was broadly as flat at 10.94. The dollar index, which measures the greenbacks against 6 major currencies, was marginally higher in Asia. Global markets went into a tailspin last week after bond yield curves inverted, signaling the global economy as headed towards a recession, sending panicky investors to the relative safety of the perceived safe haven assets such as gold and yen. So let's go ahead and get started with the bias chart. You can see that the euro just kind of holding steady here right around the 111 area. No significant move, although it's moved a bit higher, but we've taken a pretty good little whack this last week. Okay, it says after 4 straight down days from another failed upside breakout attempt, the euro found support at 1075. Stop losses of long positions intensified the sell-off. Those positions will not come back. The pair has a daily close above 1178. So saying those positions are not going to come back unless the pair has a daily close above 1178. Resistance will be 1155. Support is 1053. So right here, we're showing here, at least for our bias chart, resistance come in at 1155. I mean, we have before then, you can make the case at 1125, but this is where we'll actually see the true resistance. There's going to be some minor at 1125, but the true resistance, we're going to go with 1155. Let's see. I'll tell you what, we're going to put it like this. There you go. So initially it's 25, but then there's, like I said, we could maybe come up to here, but this is where the real resistance will come at 1160. Now, as I mentioned before, this is where basically a lot of people, we were looking for potentially a breakout. The market rolled over, and then anybody that was still left, they got pretty much all taken out here. Those positions, for the most part, that were hanging for this breakout are gone. Anyone that's long here is long for lower levels, looking for a bounce. I think a bounce is possible, and with Jackson Hole as a story nerd, I think Jerome Powell will show a favorable stance towards further easing, and which I think the market will need. So I think that would allow the dollar to go and come off. So once again, I think we can get a bounce here. I mentioned this on the Face webinar on Friday. I think we're okay. I think potentially the market can make it back to around 1170. So it's 1160. We have 1125 initially for today, but 1160, any challenges above there, that's where the market will find some resistance. I think the dollar could be a bit on the back foot going into Jackson Hole. That will allow us to go in and return back up in here. But once again, those are just bounce areas. Obviously, if power to sound a lot more accommodating, which that could allow the dollar to move further higher. But once again, that's to be later on in the week. As far as support, well, support right now, we have this 1075, but just below that, we have 1053, and that's what we're going to put for here. Is going to be 1053. Cable is attempting to form a short-term bottom. A daily close above 2165 will allow the pair to initially challenge 2225 with the target 2337. Confluence with the level of 2325. Support is 2073. So right now, we're pulling back here. We're at 2129. A bit of a slide back here, you can see here. But support's going to be 2075 here. 2075. We'll pull this up. We'll go 2075, and we mentioned on here was that daily close of 2165. If we can get that, and right now we'll go right there with 2187 for the resistance. 2187 and 2075. 2073. Let's go move into the Aussie dollar. The Aussie continues to hover near recent lows, confined to a 70 pip range over the last week. You can see here the range still staying relatively tight. And even the news with China isn't even giving it much of a lift. Not that it's a great lift, but I'm just saying it's a little bit of stimulus coming out of China, making it easier for loans, and still can't even get any kind of a lift. A break of 67.35 opens the pair for a move to 66.70. Okay, a daily closing of 68.31 will allow a test of 68.75 with a target move of 69.11. But we're simply not getting any kind of support here. So right now we have our buy chart support is going to be 67.35. And on the upside, the real resistance is going to come in right there, 68.17. It's a ways away, but I mean, we haven't done anything, so we can easily bounce here and still not change anything. We come up into the, up to 68, even take out 68, but the real resistance, the resistance that we'll have as far as the buy chart will be 68.18. Cuba is struggling to maintain current lows. The major level, 63.89, is sure to be retested with a move to 62.71 to find short-term value. The upside resistance is 64.93 with two daily closes above to negate the downside. So right now, this is going to be our bias chart support here for 63.89. Certainly looks like the market wants to slide back there. Whether we do today or tomorrow, that's where the real resistance or support comes in at 63.89. See right here. Across here, the 63.89. Immediate resistance here coming right there, 64.59. Or 64.60. The dollar CAD has taken a pause after challenging recent highs and unable to close above 33.50. Initial support comes at 32.36/20 as bulls will look to reload. Resistance is 33.01. So we're just kind of pausing here. The market's not doing a whole lot. And so you can go, crude oil is still hanging around that $55 and change area, 55.41. But dollar CAD's relatively quiet here in the session here. So once again, 33.01 is going to be our resistance for today. And it's going to drop down to 32.36. And it's just a quiet August trading day. We are seeing the euro push up a little bit higher here, but just a very quiet August trading day. Not a whole lot here. Even news to get a little bit of flavor. Same thing here. Very, very quiet. Let's move on to the dollar peso. Dollar peso maintains its bullish breakout mode after clearing the major level of 1923.6. Upside challenge is 1995 with a potential to 2031. Support is 1956 followed by 1948. So it's going to be 1956 for a bias chart support here. Start the week. Upside, we're looking at potentially 1995, but we do have some resistance coming across here, which is going to be 1972.5. So we'll go with that for right now, 72.5. Let's take a look here, actually on the 2-hour. It's going to be 1975 here. See that coming across. And let's go moving to the dollar yen. The dollar yen is holding lows, but has been incapable of generating sustained upside momentum. A push higher can take the pair to 778. That would confluence with 786 at 38%. Support is 592 with a daily close below challenging 527 with a bigger target of the flash crash low 464. Yeah, I was looking at the yen here, and it does have the potential to move higher. I'll show you here. I'm looking for higher prices here. You see here we've broken down this downtrend line. We're just kind of hanging on here with the doors open for us to potentially move higher here. This key resistance level for right now is 674, but the real resistance comes in at 709. I think we can get, we're not very far from 674. So to me, the real resistance is going to be 709, and that's what we're going to put here. And bias chart with support right now is going to come in right there, 620. Okay, let's go move into the cash dollar index. As I said, you can see how quiet the trade is. Look at that. It's just very, I mean, it's not even moving almost. You know? But let's move on to the daily, the start of the week. The dollar index has reestablished its upside momentum over the past week. Friday's range was tight, suggesting a pullback may be in the offing, with dips to 97.60 to be bought. Immediate resistance is 98.56. So, I mean, you can see here, the market had been under some pressure the prior week. We certainly pushed back above this key 97.89, opened the door with the momentum. Same way with the euro, inversely speaking. So we had the potential to, I mean, the market has moved higher. So at this point now, dips will be bought, but as we mentioned, Powell will be talking at the end of the week with Jackson Hole. And certainly he's going to make the case for the Fed to be in accommodative mode in light of all the turmoil. Not only we've seen the market, it's not so much about the market, although yes, it is, but with, the whole row with China and potentially the markets being, not only the markets being disrupted, but also the economy potentially, we've seen where the yield curve is inverted. So I think that he's going to show more of an accommodative stance that we can see this dollar pull back. That being said, pullbacks to 97.60 will be bought, technically speaking. Although, if he does suggest, and I think he can, a lot more, being more accommodative, then we can certainly take this out. and we may flip back the other direction the same way the euro flipped going down. But for right now, as I said, I think that we're going to have to allow for this to go on and pair back. Let's see if we can see for immediate support. We can move this down here. It's going to be 97.85. And right there, immediate resistance will be 98.42. And let's go move into the cross rates. The QE is languishing near 68 cents. To generate upside momentum, the pair needs a daily close above 68.90. Support is 67.59. So let's take a look here on the 2-hour chart. A little bit closer. You can see here we're just absolutely dead in the freaking water. We talked about a daily close of 68.90. Well, that's what we need to kickstart it a little bit higher. You can see here it's 68.88 on the 2-hour chart, but we're simply not moving anywhere for right now. We'll go right here for intraday bias chart support, resistance at 68.66. We got off to, let's do it at 68.65. And on the downside, 67.85. The euro is hanging on to support at 1770 by a thread. A daily break below opens a challenge at 1620. Immediate resistance is 1833. So we're just barely hanging on here at the 1770. We are starting to turn things around a bit. Trying to push this up just a bit higher here. So we find a little bit of support in here. Let's see. there for 1790. And on the upside, it's going to be 1852. And let's go move into the euro odd. Euro has pared back as overall euro weakness has taken a hold across the spectrum. The pair remains bullish and the market defended major level 63.41. Upside resistance of 65 cents with a break above 63.41 to find support at 62.62. So 63.41 is where we have our, you can see this key level coming across right here. Big major breakout level here for the market. Let's go into the 2 hour to see if we can get a little bit closer look. Here's going to be our resistance right in here coming there, which is going to be 64.27 right now. I'll tell you what, we'll keep this 32. It's just a hair bit higher. Certainly trying to push a little bit higher, but we'll keep that. And then the support right there. Get the ways down. 63.38. Let's go into the Euro Kiwi. The Euro Kiwi closed below major breakout level 73.09, defending 72.21. The pair remains in a solid buy mode. Additional support comes in 71.31 for the bulls to reload. Resistance is 73.88. And you can see here we broke here past the 73.09. There's a key level here. You can see that coming across. Now we did close below, but we defended the 72.21. You can see we held it right there. Let's go and move into the 2 hour chart to get a little bit closer look. And resistance. It's going to be right there at 73.49. There's support right there at 72. It's back here. Right there at 72.50. And let's go into the ASEAN. The ASEAN is consolidating at lows. The next likely move is to 69.47, but a short covering bounce is possible to 73.14, where shorts will be added back on. Support is 71.50. So let's go and take a look here on the 2-hour chart. Still relatively quiet. Like I said, this Aussie is just not going anywhere. So resistance is going to be right here at 72.40. Go back. 73.41. And for support here on the LCM, 71.81. And on to the guppy. The question is, where is the bottom? Major support level comes in 23.27, but ahead of that, we see a value level of 26.54. Resistance is followed by 27.90, followed by 28.41. So we did see a bounce up here from this 26.54 we had last week. We've come up here, this 29.54. Decent little bounce, but we'll take a look here on the 2-hour chart to see where we stand. And we're still trying to push up against that, which is going to be 29.54. The support coming in right there at 28.71. And lastly, let's get to the Australian odd. Starting on finished the week on a high close, opening the door for further short covering to 80.89. Support is 77.40. So you can see here, we're still trying to work up a little bit higher despite sterling weakness this morning. Came on into that support level. Let's go with that, 78.70. We had it, so we hit right to the pip. With resistance coming in 79.82. Go to the main screen. Well, you can see here this market is dead as a doornail. You can see here, look at this. The euro kind of popped up a little bit and it sank. We just kind of hold here. We're not moving, and look at the cash dollar index. I mean, we are just absolutely just frozen. And we don't have any data out in the States coming out. So it's just nothing right now at this moment. But there's the bias chart. Good, this popped into the room. And once again, typical August trading. And thanks for joining us here on the European Crossover webinar.